So one of the trades that we have on, and I don't recall if they're legacy or what they all are, but we've got a butterfly with a 250 center, not for this Friday, next Friday, which is perfect. Look at this right at the 50. Can you come down here into next week? Maybe. Really, I think we could. We also have for February 20th, I've got the 260, 255s right here. 260, 255s, and that's like 260 right here. Boom, boom. And that's for next week. So if this continues, these two trades are spot on. And then if that does happen, that could lead to the markets, once we're past some of the big earnings, that could then lead to a market top. I know we had all-time high today, and then the market drop, big spikes, and before you know it, you're coming up on February 20th, and you're sitting with all those beautiful shorts. Maybe. We'll see, right? So anyway, very important a spot here. Is this something we want to double down on? Maybe. No, IWM is not cash settled. It's just it's an ETF, just like SPY and QQQ. These are ETFs. They all have indices. They all have indexes. So the IWM, it's called the RUT. The SPY is called ES. These are futures. And the QQQ is NQ. But we don't trade those with options. You have to close the trade to not be assigned. That's true. As long as you do it before expiration, which is the way it's the way swing trading options works. You buy an option with an expiration. The option is to take possession of the 100 shares. So you, with this contract, you have the option to take possession of it at a specific strike. Let's say it was 260. You bought the 260 calls. Well, you know what? If you thought that this was going to go to 300 and you bought an option for next week's expiration and price was at 270 and you thought it was going to go higher and you wanted to own the stock, you could exercise that option and take possession of 100 shares at 260. And you'd already have $10, you'd already have $1,000 of equity in that position for it to move higher and higher and higher. That's how options work. No lottery. I don't know what that means. Just listen. I'm explaining it to you, so listen. This is how options work. But what most traders do, CTV is something different. This isn't CTV, man. This is the masterclass trading room. If you have a CTV question, ask me a CTV question. But you said IWM, so I'm assuming this is a masterclass question that you're asking. If you have CTV, you can ask CTV. You can ask a CTV question in here if you want. Just be very specific about your question, okay? If you don't take possession of the stock, what most traders do when they buy an options contract is they flip it. And they flip it before expiration. So they buy it, and they buy, let's say, this 260 call. Maybe they buy it for $3. And price moves up, and before expiration, they sell it for $5. They made $200 on a $300 investment. That is freaking great. And when you get really good at being able to do that, well, what if you spent, $3,000 and made $2,000? That's really great. So that's how options work. You have the option to take possession of it before expiration, but most of the time we flip it before then and use the leverage of not having to buy the 100 shares up front. Those are just a little primer. The butterfly on IWM, is not like a butterfly that you cash settle. No, you will have to close it. You could close that butterfly right now, in this moment, and you'd make a 10% profit because it's up 10%. But you wouldn't want to really do that because the idea is to try to get closer to the middle, try to get into that fly by expiration. Typically, I have a rule that if I buy a butterfly, this is just sort of a rule. I treat the rule loosely. But if there's any point in time, the flies have a very low, Flies have a very low win rate, about 40%. So anytime, but they're super cheap, so it's worth it. But anytime I have a fly on and I can get like a 3x return, I don't wait for expiration. I'm out. Most of the time, if that's the case, depending on price action, I'll close maybe 2/3 of my position and leave 1/3 on. Sometimes I'll close half and leave the other half for free. Sometimes I'll close just a little more than half, so I made a little bit of money, and now this is all, the rest of it is, house money. There's a lot of ways to manage the butterfly. So IWM, something you might want to consider, and I have a good amount in IWM. I have about double my pilot is what I have. I've already added to this trade. So it's a 4-wider. Oh, 260, 256. Yeah, it's a 4-wider. When I add up the butterfly and the vert on IWM, I have my pilot times 2. So I'm already added. Don't know if I want to add more just yet. So for me, I'm okay with how much I have in it. I'm just going to be watching that chart really closely, really, really closely. What I would do, if this breaks the daily 20 and then gives a little bounce to the upside and then fails at like 260, I'll go 260, I'll add another 260, 255 or something like that. Shorter term, we'll see. We'll see. I just want to watch it and see what it does.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.